Now it appears that in the downtown market there was a floor of around $200 per square foot, and once prices, if any prices got below that, the product just disappeared, went off the shelf. In Homestead, you can buy a 4-bedroom brand new townhome for $64,000. It used to be that when you bought a condominium or townhome, they threw in a car. Now you buy the car, they throw in the townhome. So the question for the gentleman here is there a floor in a couple of these markets where if you see prices go below that level, you cannot get hurt?
Generally speaking, the people we work with, and again, most of them are focused on the condo towers, many of them have this idea that if they can buy a 200 foot, that's really kind of a magic number. They're basing it on this rule of thumb that roughly it's about 250 a foot to build, to go vertical, bricks and sticks, if you will. So 200 a foot is really sort of the goal for many of the buyers. What you're finding though, because of anxiety, because of great marketing on behalf of some of these projects, there's about 6,600 units that are still unsold in Greater Downtown Miami, out of roughly 23,000. So we've sold about 70%. But what's interesting is of the 6,600, think about this, 3 groups control 57%. Those 3 groups are Related and/or their lender. Number 2 is going to be Starwood, who acquired the Course portfolio, and number 3 will be Cabby, which is in bankruptcy right now on 849 units over at the Everglades. So effectively, the market's starting to bookend. You're starting to see a range, and what we're starting to see evolve is a building like Infinity, which is controlled by Starwood, effectively. They're coming in at about 250 a foot. Then you have Icon, which is controlled by Related and or the lender, whatever the case may be. They're coming in at 350 to 400 a foot. So you're really seeing a bookend between 250 and 400 a foot, which is leading a lot of people to think that maybe they missed the bottom, and because potentially they missed the bottom, they're coming in and they're saying, I want to secure, if I secure it now, I'm willing to pay a little bit more. Same anxiety as before, now all cash, back then all leverage.